Alrighty, what is going on, Discord family, and welcome back to another edition of Market Review with me, T. Hobbs. Today is Saturday. Wait, was it Saturday? Yeah, Saturday, February 8th, 2025, year of our Lord. We will be reviewing price action from Friday, February 7th, 2025, on the Dow Jones, NASDAQ, S&P 500, as well as the volatility index. A lot of things to discuss, so let's get right into it. All right, so we'll jump over to the 4 hour and discuss our pre-market plan, things that we were looking at, things that we were paying attention to. So first thing, as I told the Discord members, whenever I trade, right, I always do a top-down analysis. I always discuss, hey, the projected, weekly profile, whatever, right? So our projected weekly profile on the week was 2.73%. Now, that doesn't mean that, it's going to move the exact way that I want it to move. It just means that, hey, we're looking for about 2.73% movement on the week. So the first thing I noticed when you come up here, this was the low of the week, right? We come up here and we look at 2.73%. You can see 2.73% was basically the high of the week, right? Once you see that, you already know, look, unless the market's going to do some, out of data, out of statistic data type things, we probably reached the high. Not to mention, we look at the weekly time frame, right? We just turn everything off. We look at the weekly. You got to ask yourself one question. Are we in premium or are we in discount, right? And this is something I've been trying to preach for the last few weeks as we get to these highs. The market's doing this thing where, it rallies up at the open and, people are just buying the highs, right? And I'm like, yeah, that's cool. Get your money. Just understand that if you're buying the high, it should just be a scout because you never know when the market could rug pull you. And today was a FAFO moment where the market fucked around. If you was buying those highs, you fucked around and found out on Friday. So, all right, that being said, let's get right into the pre-market plan. My plan was my macro was we were in a bullish retrace of a bearish trend, right? The trend was bearish as long as we stayed below, was it 233 or something like that? Yeah, 45,233, which we did. And we were bullish as long as we stayed above 43,962, and we're still above that level. So yeah, the closer we come to this level, potentially looking to buy the market, I'm not, right? Because I'm looking at us in a full downtrend, but we'll talk about that for the top-down analysis. Bears defended a critical level of price yesterday, but when unable to break the swing low, right? So that's what I said. I said bears broke this level, but didn't break the swing low. I said we are now in the middle of the dealing range, right? With huge news on the way. I will wait to participate in price. I didn't. I was definitely in before that, but until after the NFP news has passed. But I'm leaning toward a huge rally, which is what we got, followed by a massive dump as my thesis on the day. Now, I don't normally get this spot on like this, but yeah, this shit was spot the fuck on. We got a huge rally and then we got a massive dump. So again, if you don't read the pre-market plan, fine. I'm not going to make you, right? It's not the objective, but I like to hear other people's thoughts, right? And that's why I'm definitely going to be highlighting one of our members' pre-market plan on the day. But anyway, what was our range? Our range was 44,916 through 44,865 at the high. We were slightly above it and failing to go higher. Leads me to believe dumpage is coming. Our low was 44,756 to 44,659. And we just never could get through that low until we finally got through it with the aggressive, it wasn't even an NFP candle, it was the consumer sentiment candle. My bearish plan was to look for bears to defend here or here, never hit, right? And my bullish plan was to look for buyers to defend 44,590. And, even though this 4-hour candle looks aggressive, I'm going to venture to say we did get some bulls to step in here, but they just weren't, they were unsuccessful in taking the high, right? So let's go down to the lower time frames. We'll take a look at the sessions and we'll kind of walk through price that way. All right. So let's go down to the 15-minute and let's turn these Lux Algo sessions on. We can take a look at the session liquidity, right? If you look, what did we get in the open? Well, Sydney consolidated, right? Unable to break the high. Tokyo consolidated, unable to break the low. London consolidated and pushed slightly above the high. But remember, we're in a downtrend and we're in premium. That's the context that a lot of people miss, right? The context is we're in a downtrend, okay? This is a bullish retrace of a bearish trend. That's exactly what I wrote in regards to the conditions of the market, okay? If the market does not get back above 45,179, you have to assume that everything below this is to go lower. They're generating liquidity to go lower. So having that in mind, I'm only looking for shorts up here, okay? Not to mention, the other thing that we talked about was we talked about this NFP candle. I said, hey, whenever we get these news candles that, you know, form a doji candle, that's telling you what the dealing range is, right? That's telling you, hey, this is the range. Until this range is broken or failure to break, right? Then this is where you should be looking to play. If you look, as soon as we got above this candle, you could have just took a short right at 950, right? And I'm gonna show you inside of the macros why this short was somewhat predictable, right? And again, I'm not here to predict the market. I'm here to make money. But at the same time, if I can make money by predicting the market, I'm definitely going to participate in that as well, right? So if we come over here, right, we get this tight consolidation. Anybody that has back tested the chessboard, you know, tight consolidation at the PM session highs, meaning we're getting ready for a big move. But if that move fails, right, then we're going the opposite way. Understanding that we had tight consolidation at the highs, I did anticipate a huge pump, which is what we got. But I also understood that we were in a downtrend and we could get a massive dump right after. So when I saw, and I'll regret this trade for the rest of my life. I'm just kidding, because NFP will happen next month as well, and I'll be ready, right? So I took shorts at 910, 44,910. My target was simply the London low. Right? We went right to the London low. I got out. I should have just got out fully at my TP, but I was trying to see if we were going to push further, which we did. We just did it on the second drop. But I got out for 100 handle or 90 points, right? Secured that. And I told everybody, this is where you want to get long, targeting these highs, right? So as the market pushed up, I noticed, and this is a little nugget that I'll drop on you guys, just something I've noticed from my own back testing. You can go back test it yourself. Whenever the market's about to reverse, it usually gives you a second chance to get in, right? Meaning we break this high, we come back, we retest this low, you can get in here, and then we're going higher. Whenever it's a trap, right? i.e. we've swept the lows, right? Now we're going back to run the highs. The market doesn't usually give you a second chance to get in. You have to chase this. Why would they want you to chase this? Well, they want you to chase it because they plan on dumping it on your fucking forehead, okay? So that's exactly what the market did. And I stayed disciplined. I was very proud of this moment because usually, I mean, sometimes I chase this. I'm human, right? But the market started to push up and I said, hey, I just missed this move. I'm cool with that. If it's going to rally all day, so be it, right? I'm still looking for shorts. And then the 10 o'clock candle happened. We rallied up into 950 and the 10 o'clock candle brought the fucking pain, right? So all I did was I stayed calm. I mean, I did not stay calm. I take that back. I was definitely like amped the fuck up. Like, oh, you know what I mean? Like, this is who I am, right? But what I did was I stayed calm enough in the moment to let this pull back. And then I took shorts off settlement, put my stop above here. I got out for 80 points and I was done, right? That was it. I took a trade in London. I took the 920 trade and then I took this trade and I was done. When I came back and I saw this market just doing some craziness, I was like, whoa, right? But I'm starting to get really comfortable with not ignoring, but just accepting what the market did after I was gone. If I made my money, the market's going to do some exceptional shit the next day too. I'm instead looking at this as just preparation for Monday, right? Preparation to see how I'm going to trade Monday. This doesn't have anything to do with me if I've closed my trades and I made my money on the day. Because remember, the objective is to make money, right? But if you can be right while making money, go get your money, right? So 929 or 950 brings us down, right? We come into the 1025 macro, and you guys know I love 1037, right? And it's back on par. 1037 candle brings the higher low or the lower high and we barely swept it at 1038, but then it was just straight down from there. If you got short off 1037, easy money, right? That's usually my next trade, but I was already done for the day, so there was nothing for me to do, right? 1037 dropped us even lower. We traded down into 1050, which means we're going to come back up. We go close this gap at 44.745. Again, all this is doing is now back to following the sequence of price, right? Structure. Previous low, previous high, 50% tap right there at 735, easy money. Trade down into 1125, and then it's just chop city because it's lunchtime, right? From 11 to about 12:30, 1 o'clock, I don't like to be in the market, right? You guys can do whatever you want, but from like, I would say after about 11:25, like after this 1050, 11:10 macro is over, I'm probably done unless I'm already in a trade and I'm just trailing my stop or something like that. The reason why is because there's two things that this time frame does, in my opinion. It starts to consolidate and generate liquidity to go lower, or this is the reversal point inside of 1150 to go back up. If we fail to go higher, then we're probably consolidating because PM session is getting ready to bring the high, 110 high right there, right? Rejection off the weekly fib. Remember, the market moves all fair value areas and time, right? So we're inside of the end wall. We're breaking through. We clearly want to get to the other side of this end wall, which again, definitely created a buy signal here, right? Remember I told you guys this pre-market plan, we probably got longs off this area. This was the long that you could have taken. I said between 590 and 525, random, right? I seriously doubt that, right? But this was a beautiful long opportunity. You just had to understand it was a scalp. I mean, you got in at a decent area, 557, that's a 200-point scalp. So good trade. Then we get back into the PM session. If I was here paying attention to the market, I would have 1000% took this PM session trade because this is my fourth trade idea every single day. We traded up into 110. It's time to short the bejesus out of this market. The market is already in a downtrend and it basically just created the same setup as it did this morning. We were in a downtrend this morning, right? We came up to these highs, right? And failed and went lower. The PM session just repeated that just on a smaller time frame, right? We were in a downtrend inside of the PM session. We came up to the high inside the macro, trading up, meaning we're going to go down. And me personally, I probably would have took this short right here at 592 and then look to target 220 or 3 o'clock, right? The rest of it was just, it was just a straight up bleed out session. So pre-market plan worked out beautifully. Again, just getting used to trading my plan, trading my setups, and doing that every single day. That is the goal. So let's go over to the S&P 500. And I wanted to highlight one of the Discord members, Trading Yoga Girl, with her pre-market plan because it was motherfucking sauce. I didn't read it to start the day as I was already trading or doing whatever. And I went back and read it. I was like, oh boy, this was sauce. So this was the S&P 500 on February 6, 2025. We had red folder news, which is always good to know. The big picture, we were bullish. The small picture, we were bullish, right? So she was viewing the market in a bullish concept because of how ES was set up, right? I was viewing it as it's bullish, but we in premium, right? But it doesn't matter. As long as you have a plan for both directions, you're good. Overnight, we traded in a tight consolidation on the top of the range at 6103 to 6108. We are currently above all future settlements, previous day low, daily, true, and bottom of the range, okay? We're bullish as long as we stay above 60.60. We're bearish below 60.20. Look to short the high of the range, lows and highs, 6103 to 6108. Bottom of the range, 60.70 to 60.80, okay? Look for the top of the range at 6103 to 6108 to be strong support to target midpoint of the end wall, which 6115, and daily supply at 6122. I'm gonna stop that right there. Top of the range, she wanted to be support from 6103 to 6108. And she wanted to target 6115 to 6122 through 6163, all right? And all-time highs, okay? Let's go to ES and see how that panned out, all right? So you can see over here, again, she wrote this plan well before any of this happened, right? This is 6103 acting as support through 6108, and the market goes to target 6115 and then 6122. Beautiful trade if you took the long. Let's go back to her plan. Look for failed breakdown of the bottom of the range at 60.70 to 60.80, and true 6100 top of the range. Basically, this was her next plan. So her next plan was down here at 60.70, right? She was looking for a failed break of the bottom of the range. So let's go down to the 1 minute. Right right here. We got a failed breakdown of the bottom of the range. It went down much further than 60.70, but the idea is there, right? You take the longs off the double bottom because that's the entry criteria, right? And then the market rallies back up to 60.80, okay? You could take that trade. I mean, at this point, we're so bearish, you should probably look for the bearish. But anyway, this is where the sauce came in. She said, look to short week rallies at the daily supply, 61.22, and then to the top of the range, 61.0308. The daily fib is 68.89, and then the bottom of the range is 60.70 to 60.80. Those are the targets. Then she said, look to lose support 61.03, 61.08, 60.89, bottom of the range, 60.63, INWOG, weekly 60.48, and then the INWOG mid pivot at 60.35. So her lowest point was 35 to 48. So let's take a look at this, right? She said she wanted to short off 61.22. Right at 61.22, she could have took a short here. If she was here, she didn't trade this plan. She just made it for consistency purposes, right? But there's the short off 61.22. The market went and targeted 61.08, right, to 61.03, just like she said. The next target was the daily fib. Look at how we played around the daily fib at 60.89. It targeted that, broke through it. The next target was 60.80 through 60.70. That's exactly what the market did. It slowed down, which means that that was a valid target. The weekly fib was the next target at 60.66. You can see it slowed down and started to use it as resistance. Got back above it, break and retest, which is another part of her plan. Break and retest off the low of the range inside of PM session, and then goes the next targets, which was 60.48, which is right here, right? And then the only target that didn't get hit was 60.35. And she was about, I don't know, the low of the day was 60.41. She was 6 points off from calling the entire sequence. That is why I love making a pre-market plan, because if you understand the sequence of price, there's nothing left to do but to enter at the proper area, manage your risk, and then allow the trade to play out. And I'm proud of her because she's come a long way from like low key, like not knowing anything, right? To now she's very comfortable, not just creating the plan, but making the plan and following the plan, which is even more important, right? Last but not least, let's go into the NASDAQ. And this thing was just sauced up all the way, right? I didn't write a pre-market plan. And if you guys want me to write a pre-market plan, all you got to do is ask. But there's only like a couple people that trade the NASDAQ consistently, and they don't trade necessarily like I trade. But I marked out this 4-hour CE, right? Instead of marking a supply zone or whatever, because that's just huge. Whenever I get a big ass wick, I say, okay, I'm gonna use the CE on the 4-hour as my supply zone, right? So essentially, I'm looking to see what the market is gonna do inside of this CE. You can see, just like on the S&P 500 and the Dow, we came down at 8:30 for the news. We rallied right to the top of that wick, and then we put in the lower high inside of 950, and it was just ball game, right? And you know, if anybody trades the NASDAQ, you know this thing ain't really playing around. It's gonna drop, right? So it was just push up, drop, push up, drop. When the market gets like this, when we start to get very bearish, you're looking for these aggressive pops. You can either trade them for scalps, or you can understand that every aggressive pop is getting sold into when we're in a downtrend. Moving forward, you need to understand we're in a downtrend. There's no doubt about it. No question. We're in a downtrend. You see these candles on the 4-hour, you see these candles on the daily, right? This is a downtrend, right? What confirms it for me is the last thing we're going to talk about, right? Is the volatility index, right? We take a look at the VIX. My son is going crazy out there yelling at the dog. But if we take a look at the VIX on the 1-hour, the 4-hour, and the daily, it's exactly what we talked about could potentially happen. We talked about the gaps in the price, right? This gap needed to be filled. Once they filled this gap, I wanted to see how price would act inside of this demand zone. Now, we're still in a range on the VIX until we get above this high at 23. But looking at this reversal pattern, once we broke this high and came back down and defended these lows, the next thing is going to be for the market to take out 20.55 and then take out 23.155. If those things happen, we're going back to some very low prices. And I told you guys, my low for the year is way down in October of 2023. You can take your perspective chart and look to see where that is. but I think we're going to be in for a very, very low ride, especially now that we have the fundamentals lining up with a downtrend because inflation is back on the rise and Trump is a damn tyrant. But that's just my own personal opinion. That being said, this is the market review for Saturday, February 8th. In regards to Friday, February 7th, my name is T Hobbs, and I'll catch you guys on the next one, man. Peace.